Welcome back to Napoleonic Stacking. I'm the Napoleonic Stacker, and in this video we ask the question, is Bank of America influencing the price of silver, and could they be the cause of a future bull run? Stay tuned. With precious metals, and silver in particular, because silver is such a small market cap compared to many other commodities and other things people can buy, it makes it a very easy metal to move the price on once big money comes into the market. Now, some people believe that silver is manipulated and the price is controlled, and other people believe that that's just a bunch of hogwash. And I believe the truth is somewhere in the middle. In September of 2020, JP Morgan agreed to pay $920 million, including $436 million in criminal fines, to settle a U.S. government probe into spoofing the precious metal market. JP Morgan also just so happens to be the custodian of the largest silver ETF, iShares SLV, managing silver vaults spread across London and New York. So we know for a fact that there is manipulation in the silver market. The question is, to what degree does it affect the price of silver? I believe when the big institutions start tamping down on silver and the average silver stacker sees the value in fiat terms of their silver going down week after week or constantly being beat down after it's gone up slightly, it can certainly be discouraging. And it can encourage people to maybe want to get out while they can, or to slow down on their silver purchases. And the truth is, with the manipulation, whether it's JP Morgan or Bank of America, which we're going to speak on in a moment, it's paper silver that's being traded. It's paper silver that's being moved. The national debt clock actually has a paper to silver ratio actually listed on it. And the paper to silver ratio is over 300 paper ounces to 1. So the physical metal you see here is not there to support all of the digital contracts and all of the futures contracts there are for silver. And that is something that's starting to scare these big banks, as the Wall Street silver movement that began in 2021 has encouraged people to pick up the physical, to buy the actual metal itself. And the vaults in the COMEX and the vaults in London and New York have begun to see a drawdown as a result. So the silver squeeze, to an extent, has started to work. So the article on Bank of America that I'm going to be referencing was written by Ted Butler, and it was posted on silverseek.com. I'll post the link to it in the description. Now, bear in mind, some of this stuff is still cloak and dagger. It's really based around deductive reasoning based on the information that we have. So in December of 2020, the Office of the Comptroller of the Currency reported an $8.3 billion outflow for Bank of America. And this was directly after 300 million troy ounces was brought into the SLV ETF that's regulated by JP Morgan. The $8.3 billion divided by silver's year-end closing price of $26.50 equaled 300 million troy ounces of silver, which was a confirmation on the speculation. On September 30th, 2021, Bank of America had an OCC reporting of $18.3 billion. At this time, it appeared that more than 800 million troy ounces of silver derivatives appeared to have been leased and sold short. Basically, Bank of America has borrowed the physical metal to immediately short sell the metal, exactly the same way as short selling a stock. So why would Bank of America double down? The first 300 million ounces was leased short at roughly $18 per ounce. At the 2020 year close of $26.50, Bank of America was in the hole for $2.5 billion. By borrowing an additional 500 million troy ounces of silver at around $26 per ounce, then at $23 per ounce, the combined 800 million short position is roughly even on a strict mark-to-market basis. So, what Ted Butler is saying here is as the price of silver rises above the $23 per ounce, Bank of America is forced to buy in to cover the shorts at the higher price, which could cause a snowball effect in the price of silver. So, for every dollar that silver goes up, Bank of America loses $800 million because they're forced to buy back into silver. And that further drives the prices higher. Now, to put all of this into perspective, we talked about how small a market silver is globally and how easy it is to be moved by these big institutions. With Bank of America, what they've done with the 800 million ounce short, that is equivalent to the entire global supply of silver for 1 year. So the team at the trading desk of Bank of America were either incredibly smart or they have completely lost their minds, overconfident in their ability to manage the global price of silver in their favor. So, what does this mean for you and I as the average silver stacker? Well, I foresee silver prices as they start to creep up, beginning to snowball up at a much faster rate. We saw today the price of silver just crossed $24. And prior to that, the silver price had been staying steady right around that 23 mark. It had gotten beat down a little bit lower. It crept up past 23, got beat down again. And now that we're in the 24 range, we're actually kind of mid 24 range. I foresee the price of silver continuing to spike as a result of Bank of America having to buy in to cover their shorts. And not just Bank of America, but other institutions, other investors as well. Silver has always been the redheaded stepchild of the stock market and precious metals. Uh, Junius Maltby, he always called silver like a little boy on crutches, and the banks just keep kicking the crutches out from under him. And it keeps silver from being able to appreciate in fiat terms the way that it should. But kind of like holding a beach ball underwater, and the water keeps getting deeper and deeper. The beach ball eventually is going to come to the surface. These big banks, they're going to lose control. And I foresee when that happens, silver returning to its market value price, unmanipulated market value price. Now, with big institutions, with government, that may be something that they never allow to happen. The government doesn't want you owning things like precious metals, like cryptos and other assets outside of the traditional banking system. So that's why they partner with these big institutions to encourage banks to do these sorts of things. And then the $1 billion fine JP Morgan got was really just a slap on the wrist. When you look at the amount of money that they generate on a yearly basis, it's just peanuts to them is what they were fined. I think with the Wall Street silver movement and the silver squeeze, it's going to put pressure on these big banks to be able to not get away with the things they've gotten away with in the past because the physical silver's no longer in the vaults. So the paper's really backed up by nothing. The king has no clothes. So say the big banks tamp down on silver again, which they're inevitably going to do. It still allows you to pick up silver at lower market prices so that you can build your stack and help to build your future. And inevitably, just like we talked earlier, I believe that the silver price will have the ability to run one day. And when it does, it's the people who have the physical, the people who hold their wealth in metals are going to be the beneficiaries. And those who hold all of their wealth in paper, much like those in Weimar Germany and these other places that had massive hyperinflationary events, those are the losers. Silver and gold go a long way in Venezuela towards getting you the things you need to live. But as far as manipulation goes, I don't know exactly how much it affects the price of the metals. Give me your opinion in the comments. What do you think about all this? Do you believe in manipulation? What do you think about Bank of America? Let me know. And thank you so much for watching. If you enjoyed this video, please give me a like and subscribe and share with your friends. And until next time, Napoleonic Stacker signing out.